Are you ready? Are you ready? Because we've got 3 days of very cool stuff lined up for you. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not necessarily indicative of future results. This is training. This is um, something you will research and make sure that it fits you. So please take notes, write your questions down. Most of the speakers will take questions on the fly, but some do like you to hold until they're done with their presentation. So I will now introduce Mr. Price Headley of BigTrends. He's going to talk to us about how to trade same week options in 48 hours or less. And Price has been with us before, and it's always a good time. I wanted to just let you know that he's the founder of BigTrends.com, which provides investors with specific real-time stock and options strategies and investment education to profit from significant market trends. He's appeared on CNBC, Fox News, CNN, FN, Bloomberg TV, and a variety of print and online financial news outlets, including the Wall Street Journal, Barron's, Forbes, Investors Business. He's everywhere, y'all. Timer Digest recognized the success of BigTrend.com investment. BigTrends.com. Sorry, I'm a little tongue-tied here. The success of BigTrends.com's investment strategies by ranking Price among the top 10 market timers for stock market timing. That's amazing. Thank you for joining us, Price. Let me see if I have you muted. Yes, I do. Now you're unmuted.
There we go. Thank you for having me, Sherry. I appreciate
How
the
are you
kind
doing
intro.
today?
I'm super. How about yourself?
I'm good. Hey, are you a dad?
I am.
So,
Got
do you have any funny dad trading stories for us?
Oh my goodness. Well, my daughter is 7. She's a late in life miracle child. So I'm just
Oh,
trying to teach her about the stock market and she's kind of like, huh? And I'm like, you know what? When you drive by, she very much recognizes all the brands. So when you drive by the Starbucks, you drive by the Golden Arches of McDonald's. She's like, oh, there's Starbucks, there's McDonald's. I'm like, yes, those are companies that you can
stars.
actually buy shares in, and you can start to own a piece of that business. So we're in that stage right now,
Oh,
just
that's
getting the awareness,
exciting.
which is a lot of fun to see the aha moment there. But yeah, really good with those brands. It reminds us of the power of those brands.
Oh, wow. Well, and it also reminds us how their symbols become so noticeable, especially even
Absolutely.
for a 7-year-old.
Yes,
That's really
exactly.
awesome.
It's
The
cool.
7-year-olds are a lot older than we think they are, I think.
She picks up a lot for sure.
I have a granddaughter about to turn 4, and it's almost like I'm pretty sure I was like that when I was 6 or 7.
Exactly. When with the power of media and everything else, of course, it just reinforces why these brands are so ubiquitous and so in our minds and obviously have become huge stocks. So let me share my screen here. So you just gave me that ability
Yeah,
here. So let me pop it up here real quick.
I'll tell you what I'll do too is I'll make you an organizer as well, but it's going to knock your mic out for about 3 seconds. So hold
No
on.
problem. Thank you so much. That's great. I can see the questions there. Send comments. That's always a pleasure. I'll do my best to
I'm
get us
going to.
back on time, Sherry.
Oh, well, don't worry about that. I just appreciate you being so patient because we did have a little bit of a mic problem, but and I know everybody else feels the same way.
Oh
It's
yeah,
you
it
do what
happens.
you can. Yeah. So I'll mute myself and you take it away. And thanks a lot.
Thanks, Sherry, for having me. It's really a pleasure. And obviously, folks, welcome. You've got a great, not just first day here, but 2 more great days to come. I know. So you got just tons of great traders and presenters. So I want to kind of focus you on something that I've been finding has been working really well if you've traded options. Or if you haven't traded options, maybe why you might consider getting a little growth kicker into your portfolio. And maybe just so I can make sure you're hearing me okay, folks, if you could type in if you traded options or not, just type a number. If you've traded options for 10 years, type 10. If you've never traded an option, type a 0 in your chat box. I'd love to see how many people have traded options or not, but also don't worry if you haven't, because we'll make it simple for you. So we got a 10, a 5 right off the bat. I tend to get a lot of folks. There's great to see you, Randy, one of our fellow winner circle students, and zero. Don't worry, David. You're okay. You're in the right place. We'll make it simple and make it understandable, because most everything that I've done in my 33 years plus of stock and options trading is the KISS principle. The simpler you keep it, usually the more effective you're going to be. You don't want to overly complicate things in whatever your trading strategy and plan is, getting in, getting out. So great to get that feedback. Let's go ahead and get into it. And I'm going to share with you what's become the hottest trend in options trading. You may hear the term zero DTE kicked around, which means 0 days to expiration. I'm not going to quite cut it that close, but I'm going to say within 1 to 2 days before expiration, there's some great opportunities here using these same weekly options that basically have just a couple days or less of life left. So we're going to show you how we trade those in and out, and also to not have to worry about day trades. So you actually can take advantage of this as early as 3 o'clock today would be our first potential window of opportunity to get a new trade out for our subscribers in this strategy. We call it Lightning Options Trader. So as we get into it, let me just remind you that the information I'm providing you here in today's presentation is based on our proprietary research. It's intended for illustrative purposes only. These should not be considered specific advisory recommendations here today. As you know, stock and options trading have large potential rewards, but also large potential risk. The past performance of any trading system or methodology is not necessarily indicative of future results. Do see our terms of use on our BigTrends.com homepage for more information here. So with that understood, my goal is to kind of zero in on kind of the highlights of what I've learned in trading these short-term options. And I'm going to give you 3 secrets that we use to trade these same week options effectively. Let's face it, not every trade you make is going to win, but it's about how you control the size of your win versus the size of your loss. So we talk about that in our 3rd secret, the stops and targets, right? So that's going to be part of it, setting up a favorable risk reward ratio. But as I alluded to, we might have a trade as early as 3 p.m. Wall Street time today, an hour before the market closes today, in an option that's going to expire at the end of the day, this Friday. So basically 49 hours to go before expiration if you break it down in actual hours. But the bottom line is that what we want to do is we want to say, okay, the reason we do that is you pay a lot less for those options. So what does that do to your leverage? It dramatically boosts your leverage, right? Now, we don't just want to boost leverage without having an edge. Anytime you trade any option strategy, realize that if you're using the double-edged sword of leverage, it cuts both ways, right? You can make more, but you can also lose more. So controlling the window of opportunity and not just firing out trades to fire out trades and get some action, but to say, forget about action and focus on results. Focus on when you have an edge. If you don't have an edge, don't trade. How do we get an edge? The second secret we're going to get into is the double confirmation, not one indicator, but 2 key oscillators that are similar but distinct enough that both of them telling us we've got a fresh new signal is very important. So we want to try to minimize the fake outs and get the true breakouts, right? So let's take the fake outs and let's try to cross out as many of those as possible and focus on things that really have some staying power even for a day or two. If you don't know me, I've been trading for over 33 years. I caught the trading bug while I was at Duke University after graduating from there at the end of the 80s. I went on to work for the nation's largest options newsletter for most of the 90s, and then launched BigTrends.com in 1999. So now in our 24th year here serving BigTrends.com, many thousands of clients all over the world. As long as you got a good internet connection, I've always said that's really what counts, no matter where you're based. I'm based in Lexington, Kentucky, so you can do it from anywhere. But the bottom line is that what's powerful about today is that this is a fairly recent development that we made our Big Trends community aware of, to say, hey, let's take advantage of this short-term till expiration strategy, but let's make sure we still got some breathing room, right? Warren Buffett talks about having a long runway in his investments, right? Well, we obviously have a shorter runway of a couple of days. That seems like a really short runway, right? But the reality is, when you look at intraday charts and then you find these setups here, you can really harness the power of this, especially if you get your timing right more often than not. So when we talk about these 3 secrets to harness the power of these same week options, the first one, as I alluded to, is certain days of the week are better than others. Okay, so right away, I will tell you that Monday and Tuesday are off limits. Okay, we don't try to trade on a Monday thinking, oh, we've got more time to go to the Friday expiration. That would be 5 days away to that weekly expiration at the end of the week. That seems like something you'd want to do, right? But the problem is when you don't wait, you're going to pay up for those options. By waiting those first 2.5 days of the trading week, we will allow ourselves to get enough of a sweet spot. We will also not trade on the final day of the week on the Friday. So we won't have a new trade even on a Friday morning for a Friday afternoon expiration. That's just cutting it too close to the razor's edge. So where's our sweet spot? Our sweet spot is on either a new entry on Wednesday afternoon around 3 p.m. Wall Street time, an hour to go before the market closes Wednesday. So that's coming up here in just about 2.5 hours is our first potential signal point. I'm confident that we'll get a new trade, but I never guarantee a new trade until our signals and our scans have all been run, because we never want to force trades, right? We care more about making sure we keep you in the game for the longer haul with strategies and trades that have an edge over time. If we don't get one on a Wednesday at 3 p.m., there's a really good chance that we'll get one at least on Thursday at 3 p.m. We will not enter Thursday morning, Thursday at noon. We would wait until Thursday at 3 p.m. You say, well, that's only got a day to go till the expiration. Technically, that's 25 hours to go from 3 p.m. on Thursday into the 4 o'clock Friday expiration Wall Street time. So the goal of this is to say, okay, why would you trade that close? Because you're going to pay a lot less, you're going to get a lot more leverage. You're going to, and as long as your system has an edge over that 1 or 2 day span, you don't need to try to worry about what's going to happen next week, next month, next year, right? The bottom line is it's about taking advantage of that powerful momentum. And we're going to get into the momentum indicators here in just a few minutes. But first, you may have heard about weekly options if you're new to options. The idea is that it used to be when I got started in options trading about 1990, the third week of the month, the third Friday of the month actually was the monthly options expiration. So I would do this strategy short term in the final days before expiration one time a month. But now every single Friday on this chart, you can see this actually looks like the June Fridays will look actually here from June 2nd to then this Friday, June 9th. The next Friday, the monthly options will trade like weekly options next week, June 16th expiration, then the 23rd, and then finally the 30th. That's a 5 expiration week cycle this month. A lot of them are 4 weeks in a month, but bottom line is that you get 5 times the opportunities that I used to get when I first was doing this strategy when we just had monthly options. So weekly options have dramatically expanded your opportunity to take advantage of these situations. They're available on most of the blue chip stocks that are active enough to basically handle good weekly options contract volume. So you're getting better leverage as you get closer to expiration. Yes, there's risk. If you sit still and do nothing, there's risk. And when you buy an option, you could lose every bit of what you put into it. Okay, so that's the risk that we're dealing with on the front end. You can't lose more than you put into it, which I know some people who like to sell options sometimes don't realize that they might be taking on more risk than what they're collecting in up front. We don't want to do that. We want to say, let's cap our worst case risk and also still come up with strategies to manage the trade effectively. So the technical momentum is going to be our key, right? We're going to be looking for the technical analysis angle that gets us an edge. There's nothing truer in my view in how to trade the markets than price action. Sure, there's occasional fake outs, there's volatility, there's things you have to be able to manage through, but at least you know where the money flow is happening, up, down, or not at all sideways, right? So the point is that take advantage of what the charts show you. It'll be a lot truer than if you buy a stock because it's quote unquote cheap, because it has a low price earnings ratio or a low book value or something. You might be sitting in a cheap stock for a long time. That's death in options buying, right? We can't do that as an options buyer. We got to catch speed of movement as options buyers. So why should you care about this? I mean, you look at the performance of this Lightning options trader strategy over the last 3+ years, you can see almost coming up on 3.5 years at the end of the month. Since January 1st, 2020, so we're talking about including the pandemic, 30% haircut in the market in about 6 weeks from mid-February 2020 to the end of March 2020. Low was like, March 23rd or something like that, 2020, with the pandemic spike down. And then, of course, the bounce back up. And then, of course, the bear market last year in 2022. Despite all those swings up, down, and sideways, you could have grown a $5,000 account to over 22 grand when you add up all the gains and losses before commissions or before your subscription investments. You say, okay, be nice to make 17 plus grand, right? This assumes you were putting in no more than $1,000 a trade. So the point of this is that, okay, we're going to limit your risk on an individual trade. We do not compound these returns when we look back and say, how do we do? We just say, even as you grew your account from 5 to 22, you would still be saying the next trade gets no more than $1,000 a trade. So it actually is reducing your risk as you move forward and grow your portfolio. Past performance, as you know, is never a guarantee of future results. Future results will vary. But you can see here, this would have resulted in a 350% return amid a market that's frankly had a lot of traders and investors flummoxed, that is quite confused from a lot of the masses out there. The reality is the minority of traders are going to make the majority of the money. We want to put you in that successful, you know, top few percent that has the best edge over the rest of the crowd. And the beauty too is when you say, well, what about the bear market last year, 2022 performance? Even during a bear market, this strategy was up last year. On a $10,000 account would be up 9 grand in gross profit, adding up all gains and losses before commissions or subscription investment. That'd be a 90% gross return in a year where the NASDAQ was down 30%, the S&P was down 19 and change percent. So crushing the market, when you can see how to take advantage of not just the upside, but the downside, right? So I've always said, when you get into options, one of the attractions not just is the leverage and making more money more quickly, but it's also about being able to trade the downside effectively, not just the upside. You have to be able and confident to be able to trade when we have an up signal or we have a downside put buying signal. Okay, so you say, so what are you using to find these trades? So this is what we're going to talk about is the principle, right? I can't give it all away, but I can tell you secret number 2 is that one, just like 2 heads are better than 1, in our opinion, in this particular system, of course, 2 indicators are better than 1. It doesn't mean that 3 would be better than 2 and 4 would be better than 3, but it means that it just gives us a way to say, is this breakout or breakdown fresh and likely to have legs, likely to have more opportunity to keep running in our direction? So, and our prior speaker, Rick, also alluded to this too, that we use oscillators. A lot of people would say, oh, he was mentioning RSI. If RSI gets overbought, people will bail out and think that it's got to go back down. In my 30 plus years of trading experience, that's what has cost more traders not only more opportunity loss when the stock keeps staying overbought and keeps going up after it first goes overbought, but also it's cost a lot of traders a lot of losses and money given up when they are betting it's got to come back down. I'm going to be betting that it's going to reverse back down. That's not what you want to do, especially on the quick trade momentum model, right? Because when you're looking at this over the next 1 or 2 days, you're saying, hey, that overbought signal can actually be the start of something more meaningful when people are buying, say, an earnings breakout on a stock or institute. And remember, when I say people, it's institutions, not you and me as individual investors and traders. Institutions are the ones with the billions of dollars that are driving the market and these individual stock situations up and down, right? So they want more of a good thing and less of a bad thing, just like you and I do. But the reality is that they can't usually build their position all in one fell swoop. Bang, they're all in for 50 million shares. No, they would splash the water out of the pool, even in some fairly blue chip stocks if they traded like that recklessly and all at once. So they ease in. I believe that's why these trends tend to exist. So when we get those both indicators firing, hitting their overbought or oversold thresholds on the exact same day, exact same bar or candle, whatever you want to look at on your chart, it's about saying, look, that's confirmation to us that we're seeing both of them signaling together. That gives us not only that extra confirmation, but really extra confidence in our trade. So let's get into the charts and talk about some examples here. Here's a winning trade example looking back on eBay, the online auction leader. And what I've got on here is I've got the 2 oscillators, one shown in this kind of red and gray signal, and I didn't even change the color because red is supposed to be bad, right? Green is supposed to be good, right? You see the green and red candles up above, that just means green candle, we opened lower and we closed higher, right? So that means that's why it's green versus, over here we opened higher and closed lower. That's why that candle's red, right? So that's all that shows you in a candle analysis. Makes it, I think, a little bit preferable to a bar chart analysis. But what I care about is not just that momentum open to close, but I care about that both of our oscillators, and unfortunately I can't give them away for free, but when you sign up, I give you all the settings, the oscillators, everything you need to know to plot it on your end, but you don't need to even plot it. We're going to call out the trades real time for all of our Lightning Options Trader subscribers via real-time email and real-time text alert to your smartphone, which I highly recommend. That's become, frankly, the most popular way people get these signals, to make sure you get in before the market closes that day and ready to go for the next day. But the point is that both of them are crossing from under their overbought thresholds. Notice we've got a couple different threshold levels here, but on each of these, they're different. They're different oscillators. Not like we just took the same oscillator and changed the time frame. They're different oscillators. There are similarities. You see, they're moving somewhat similar, but there's times where they will move a little bit different from each other too. But you can see, like, even back here, for example, you would say, well, would I bought that move? Question mark. You see, if the next day you wouldn't be too happy, right? It was down. No, because it was not getting that second indicator confirming also at the same crossing point. So there is no signal there. X out the question mark. There's no interest there until both of them cross together. So what do we do? Both of them crossing together. Part of the reason we wait till 3 p.m. This is actually a daily chart. Part of the reason we'll wait till 3 p.m. daily chart on eBay, that we say, look, if you go back and say, well, what are the odds that we're going to close at equally overbought crossover breakout levels on both indicators? We'll know a lot closer to 4 p.m., right? We feel like at 3 p.m. or so, that's gonna, if it's fairly convincing on this breakout here and it's looking like it's finishing on the strong side of things to the upside, both of them crossing overbought. This is why I say overbought's not bad. In fact, it can be powerfully good for, especially for short windows of time. Especially when you get both of them confirming together, right? It helps us avoid those fake outs like I showed you in that prior couple days before, and say, okay, at this point right here, you see where eBay's trading? It's in the neighborhood here of finishing the day at about 45.5. So this is an option that we actually bought on April 27th. This was actually a Thursday 3 p.m. signal with just a day to go, right? So the expiration of that fourth week of April, just looking back here just over a month ago, was going to be the next day at 4 p.m. the 28th. And yet it's not a day trade because we put it on Thursday afternoon. We're going to hold it at least into Friday morning. We're going to talk about our targets and our stops here in just a minute, but you can see the next day the stock goes from 45.5, intraday it's above 46.5. So now if you're new to options, what's that 1 point or 2% move in eBay worth to you? Well, notice we bought the 45 calls. They're going to expire the next day, and they were worth about 50 cents intrinsically. We paid 67 cents. That's 67 bucks you've got to pay for one option contract that controls 100 shares of stock. Obviously, 100 shares of stock would cost you over 4,500 bucks. You're controlling $4,500 of stock for $67 before commission, right? And commission should not be costing you more than a buck a contract per side, right? So, hopefully, as you get more active, you can get that down quite a bit. But the idea is that, look, you're going to keep the vast majority of what you make in this type of a world that we're in now. Best time I've ever seen in my 33 plus years of options trading experience from a commissions perspective, being so low. But point is here is that their target was up right near a double. So double is going to be our typical target. We said, okay, we're close enough at 97%. Let's take the money and run. So obviously, what does that mean? It means that for every contract you bought at 67 bucks, it's getting closed out just under what it would be. 100% would be at 134 bucks a contract. $1.34 is they're quoted. So we might have been out at, say, $1.32 or something like that. Okay, so and you think about that, what does that mean? $1.32 on a 45 strike means that add $1.32 to 45 with no time value left, that has to be trading up around 46.32, 46 and a third. Obviously, it got up intraday a little higher than that, but I guess we were close enough to say we don't hold it into the last hour of the Friday expiration day. We will tell you by 3 p.m. on that Friday, even if we just got in the day before at 3 p.m. on Thursday, we want to make sure we don't miss subscribers getting out of a trade, just like we don't want you to miss getting in. We especially don't want you to miss getting out. And we never leave you hanging. We always guide you through every trade, win, lose, or draw. We say, okay, time to stop, hit the stop on this one, hit the exit button, or take the profit on this one and be done with the trade. So you'll never be left hanging. Now, you can see that was a very limited window, right? If you look at that window of time into the next day, you say, Well, gee, the next week it dropped off. I could care less what happens next week, next month, next year with this strategy, right? If you can be doubling your money in 24 hours or sometimes 48 hours on your profit targets being hit, that it doesn't take a lot of those to start to build yourself a really nice cushion. And then it's about how are you managing risk, which we're going to talk about that too. But let's first talk about an opposite example. This is a bearish example here on, actually, let me take this back. Actually, this is actually, we popped in a bullish example here. So let me look at one more bullish example here. This one's GE, General Electric. So what's happening? This is actually pulled out of, that other one was pulled out of TradeStation. This is pulled out of Thinkorswim, just to show you that you can plot this stuff yourself across a lot of platforms. So at the point at which we got one oscillator crossing, the other one had gone below and then crossed back above here too. So both of them are crossing on those rectangles on the same bars close here. GE trading right near 103. We're buying the at the money GE 103 strike calls. We're oftentimes in those kind of situations, we're looking at a situation here where we're going to be able to take it. This is a daily chart. You can see here that we're going to be able to take advantage of just that quick little pop from about 103 to about 105. If you paid $1 for those 103 calls, at $2 at 105 intrinsically, that's your double, right? We do not sell partials here. We say take the whole double and run. This is a 1 to 2 day quick hit type of a strategy. If you put $1,000 in, you get $1,000 in gross profit in 2 trading sessions, right? On about a 2% move in GE. So 50 to 1 leverage, right? The leverage potential is tremendous. The beauty is we trade both sides, calls and puts. And what's interesting, even in the bear market in 2022, you would have thought we'd have a lot more puts, but it was almost evenly split. We actually had 51% calls, 49% puts. So about a 50-50, right? A coin flip from one week to the next. The beauty of that is you're never left fixed with a view like, I must buy this market, I must get out of this market. The market's going up over the long haul, it's going down over the long haul. Really, whatever happens, we don't care in the strategy. You care about what's going to happen over the next day or two, right? That's the whole point of options. Only hold them while you have an edge. If you don't have an edge, get rid of the trade. Before I go into the stop loss rules, let's talk about when you have one that doesn't hit its maximum 100% profit target. And some of these, by the way, will hit 100% and keep going to 150, 200 or more. Again, I don't care. I take the 100% and say that is sufficient to say book them Dano, lock in that gainer and move on. This is a Pepsi trade that was closed the next day because we got in on a Thursday, out the next day is the expiration day, ended up around a 60% profit 1 hour before those options expire. I know for new traders, you might be thinking, man, this sounds like I'm cutting it way too close. But the beauty is you're not, because I always say start small. So you could even trade one contract for starters and just get comfortable with it. This is a put example. So now both of our oscillators are hitting the oversold thresholds and that lower oversold reading on that first one there, and the next one here, this is going back actually January the 13th expiration. We bought it on the afternoon of January 12th. Pepsi here is trading around 176. And you can see that means a 177.5 put. If you're new to options, a put, a right to sell the stock at that strike price of 177.5. If it's down at 176, that's already got $1.50 of time value. We're only paying $1.88. And we're saying we think that $1.88 can double and go on to about $3.76, which of course would mean that we'd be down to just under 174. As it turned out, it dropped down to about 174.5, did not get back to our 174 profit target. But we're saying, hey, in the last hour, we've made a little bit of money here into that last hour. And basically we're saying, let's close it out around $3 and take a 60.64% gain an hour to go before those options expire. So you never worry about getting exercised or assigned on a stock, right? You never are trying to buy the option to go acquire Pepsi or go, in this case, sell Pepsi shares. You're not messing with any of that stuff because you're out at least an hour before. We've always got live bodies standing by at our 800 BigTrends phone line or via email and text, where if you've got questions, you think you missed something, you can always contact us in real time. We're here for you as a subscriber. Now, the bottom line, though, is that is a very short window, right? Just catching that next kind of quick momentum pop to the downside. But let's talk about a loser too, because you need to know what your risk is in any strategy. And I want to be very clear on what our usual stop loss is, unless we get a big gap against us where a stop could be past a 50% loss. In the 50% loss area is where we want to say get rid of the trade. This one on Semiconductor, ticker ON, looked great, right? Everything's all systems go, like I just showed you before, right? Both of these firing at the same point here. The stock's finishing near 76, and we're buying the 75 calls for $1.53. So about a buck of that is maybe a buck and a quarter even is intrinsic value, and yet, of course, that means if the stock starts reversing down, think about it. If it finishes at 75 or less at the expiration, what's that option worth? Zip, zilch, nada, right? It's busted. We don't want to ride it to the bitter end at zero. And you can see it, by the end of the day, the stock was at under 72 bucks from having bought it just above 76, right? This is actually one of the advantages of options, in my opinion, versus stock. Is that okay? People think about, oh, well, the leverage on the upside, but think about the dollars at risk on the downside. If you bought 100 shares of stock at, call it 76, paid $7,600, closed at the next day's close, you'd be down $400, give or take. So point is that okay, if you bought this at $1.53 and then we sold it out around 75 cents, then basically we lost just under 80 cents. I call it 80 bucks. So even here, would you rather lose 80 or would you rather lose 400, right? You were controlling that stock. That the stock owner is losing more if they're just kind of riding it out. Of course, they end up losing a lot more over the next week too. But we're saying, look, a 50% loss is a sign that we're not right. And a lot of people tell me, oh, that's too loose. I want to use a 20, 25, 30% stop. That will whipsaw you out of some otherwise good trades. We don't recommend that with this strategy. What I say is that if you're worried that's too much risk, trade less contracts. Even if you just trade one contract and you're risking what turns out to be about 80 bucks of a loss on this trade, would you risk 80 bucks into the potential here to make about 150 if it doubled, right? It's a 2-to-1 reward for our risk, is what we're usually looking at for our targets versus our stops. And the third and final secret here is line up those favorable risk reward ratios by using the 50% stops, 100% targets. I'm already alluding to it here. As you know, it doesn't take that many doubles to healthily build your portfolio. If you were using, say, 10% of your capital allocated, say you had a $10,000 account, you put $1,000 in, every time your 1,000 doubles and goes, then your portfolio has just gone up on a 10% allocation. Your portfolio went from 10,000 to 11,000 on that first doubler of $1,000, right? You're up 10% on a total portfolio basis off of one single trade. You start stacking 3 or 4 of those, and that's most people's year, right? You make 30 or 40% in a year. Most people would be not just happy, but ecstatic, especially with the market volatility we've seen the last few years. As you can see, over the last 24 months, not every week we're gonna generate a doubler. We've had 31 profits of 100% or more over those past 2 years. The point of this is that it doesn't take a lot of those to still have it end up really building your portfolio. Every once in a while, you will get gaps either in your favor or against you. As you know, you can't lose more than what you put into the trade, right? But you can make many multiples of what you put into the trade when you get a favorable gap working for you. So here's an outlier for sure. It's not going to happen very often, but this is one that our system picked up First Solar, and it turned out to happen right before a surprise Washington, D.C. bill passed that put a lot more money into renewable energy, solar, wind, et cetera. And the stock's trading just under 77. We're buying essentially the at the money 77 calls with 2 days left for just under 2.5. Our average entry was $2.49. So if you're putting $1,000 in, you get 4 contracts in at about $2.50 a piece, $2.49 a piece. So point is that in this case, you say, well, look what happens. It was at 77. This surprise bill passes, helping First Solar and that whole solar industry, and the stock opens just near 90. Now, what do we buy? We bought a 77 call. Think about this for a second. What's that mean? It's a right to buy the stock at 77. You say, hold on, 77. Now it's at 90. That's got to be worth 13 bucks intrinsically, right? That $2.5 just turned in by a little more than the multiplier of 5, which is a 5-bagger, meaning it's a 407% gain the next day. Now you might say, well, you know what? It went even higher from 90. It went to 100 the next day. If you'd had the the guts to hold it, sure, but we don't want to let a bird in the hand slip away, right? We take that anytime it gets a windfall like that, even past a double, we say just take it, be happy with it, don't get greedy, right? Bulls and bears can get rich, but hogs get slaughtered. So the point of this is that when you recap these three same week secrets, like I said, it's taking advantage of what's become the most popular strategy in the options world, which is the zero DTE, trading the final day of expiration. It's taking advantage of that same concept, but it's saying let's just stretch it out a little bit over the next maybe 1 to 2 days extra, right? Instead of buying the Friday morning and selling Friday's close or before day trading, we're saying no, let's actively swing trade, buying on Wednesday and selling out on Thursday or no later than Friday, or sometimes buying on Thursday and selling out on Friday. We're not going to sell out the same day. So that way you don't have to worry about day trades. You can do this with a small account as a result. You don't have to have a big account to do this. And what I always encourage new subscribers is start small. Start even if it's one contract at a time, just to show yourself that you have the discipline to be able to execute this and be able to follow it. Like I said, when you become a new subscriber, we give you the specific oscillator settings and rules. You get dedicated weekly video training from me and a whole lot more. I'll tell you about that in a minute. But it's all about take that double and run, or if it hits the 50% loss, get rid of it. Don't get in Monday or Tuesday. Look at either Wednesday afternoon, like I said, just over a couple hours from now, could have our very next trade for Lightning Options Trader subscribers. So I've figured the time would be good to talk about this right in front of a potential new signal for new subscribers coming on board, to not have to sit and wait, but be ready for new opportunities here this week, either in a couple hours or by tomorrow afternoon at 3 p.m. too, if we don't get one today at 3. Reminder on the performance, you saw it before, but if you came in late, obviously a $5,000 account on Lightning Options Trader since the beginning of 2020. This is through yesterday's close, up to 22,500. This is gross before commissions and before subscription investment. But with all the market volatility we've had, to be able to generate 350% gross return, 17,000 plus in profit potential. We know that we can't guarantee any number in the future. We're always working for subscribers to keep on honing our edge and looking to sharpen the saw, as Stephen Covey would say, always looking to get better and better. But the bottom line is there's going to be losing trades too. So that's why I say be sensible about, don't get too greedy. After you get a winner, don't start loading up on your next trade. Just say, I'm going to take the same set amount of money. I'm going to follow this through for a while. So, and even in 2022, the bear market, stocks down 20 to 30% or more. If you were in those go-go growth stocks that got crushed down 70 and 80% last year, this strategy was up 90%, taking every trade, adding up all gains and losses before commissions or subscription investment, and saying, okay, it'd be nice to make $9,000 in a year when everybody else was losing money for the most part. So as you can see, it's all about finding strategies, typically a trade a week on average. So we're not trying to overtrade here. Even if you just get a trade a week, 4 trades a month, you can start stacking those gains really nicely. So let me share with you what I've set up as a thank you to Sherry and the Traders Exclusive team. I've set up some extra bonuses you get with this offer today at an incredibly low starter price point to just get you started and get you experiencing what you've been missing. 3 months of trade alerts from Lightning Options Trader. So like I said, if there's 13 weeks in a 3-month window, I would expect to get you about 13 trades. Could be a little bit more, a little bit less, but it's about quality first, not quantity. And then saying, okay, look, each one of those has the potential. If you trade $1,000 in, you could potentially make 1,000 on a trade, any trade or any series of trades, while knowing we're going to use a 50% stop loss too on some of those that get knocked out too. But I'm going to give you some extra bonus resources here, because I don't just want to give you fish. I don't just want to give you trades. I want to help teach you how to trade this yourself. Over time, you'll learn how to do this, and you can actually spot even more opportunities with the education I'll give you, in addition to all the trade alerts that BigTrends helps provide you. So you get the settings and rule sheet. That gives you all those oscillator settings, exactly how to plug it in on your platform. You don't have to worry that you have to do any work. You don't have to follow the markets. You just know at 3 o'clock, give or take a few minutes, that's when we would see a new signal on a Wednesday or a Thursday, and we'll give you our client care contacts in case you worry that you missed a trade. I'm going to also every week update you with a weekly video update that includes my Lightning Options Trader analysis on what happened last week, what we're expecting for this week. I also give you access to me and my analyst team and my research department via dedicated specific email address to answer any more research-oriented questions, trade-oriented questions you have about the alerts and the portfolio. That all added up would be at least an $891 value. If you take our $297 a month list price, you could pay each month at that price times 3 months. So I'm going to say, you know what? Let's dramatically save you a bunch of money here. Let's cross that down. Also, I'm going to do something I normally would not do in a 3-month offer. Usually I would save this for a 1 year or longer offer, but I'm going to do this as a thank you to Sherry and all the good folks at Traders Exclusive. The first 14 buyers here today will get my quick options boot camp course. This includes about an hour in each session going through the details of the Lightning Options Trader system. So a lot of people try to hide their system, try to keep it proprietary. All I ask is that when you become a subscriber, you just use this for your own benefit. I'm trusting that you will not be broadcasting this out around the web, because that would lessen the edge that you and everybody else have, right? But we keep it very select here. Second session going deep into the indicators and how to scan for new opportunities too. So it's not just knowing something, but it's knowing how to go get the gold out of the mine and actually dig it out with the scanning. And then third session, how you manage each trade, how you manage your psychology, capital allocations, and managing the whole process of success in trading. That's an extra $297 value, but I'm throwing it into you today as an extra freebie if you're one of the first 14 to act. So when you quickly just look at this, 3 months of trade alerts, it would cost you $297 a month or $891 over the 3 months if you bought it straight off of my website. But I'm going to slash this down. I'm going to throw in the boot camp for the first 14 buyers. Total value over $1,100 plus dollars. I'm today saying scratch that out. I'm going to give you this insane markdown here to just 177
Wow.
bucks. It's a one-time investment share.
Wow.
So
What's
one-time
the link
investment,
to that?
no auto build, no nothing. And why do I do that? Because what I find is that once you see what you've been missing, folks, you will be blown away and you will want more of it, right? That's how we've grown BigTrends over 23 and a half years and counting, is basically by word of mouth and by experience from our customers and saying, I like that, give me more. So
Yeah.
we're confident this is just basically a way that you can get started, really take advantage of this. And I got to give you the link for it, though. You got to know that
Okay.
this is not a www. It is a
Big
members.bigtrends.com
trend.
link /LOT3. I appreciate you popping that in for me, Sherry. And let me
Doing
show
it
you
right
real quick.
now. There
Thank
you
you so
go.
much.
Oh
What
wait,
we're
I got it.
Remember how I mentioned about the KISS principle? Keep it simple. My philosophy is our order pages are the same way. It's like, boom, it's right there. Credit card information, get your name and billing information in there. And if you want to go PayPal, down at the bottom right, you can scroll down and see the PayPal there. It's all laid out for you. And I want to say one thing here was that usually we would ask our buyers to add on the boot camp, and it would cost you usually $295. And on this page, it's showing an extra $77. Scratch out the $77, folks. If you're one of the first 14 to buy today, I will take that and make it a free bonus. So if you're going to get that all in with the boot camp,
Wow.
and that's lifetime access on the boot camp, by the way. You get 3 months of the alerts, but lifetime access on the boot camps, that alone is worth a lot more than 177 bucks. So the point is that it's members. Luis asked about that. Members.bigtrends.com / LOT for Lightning Options Trader 3. LOT, the number
It's
3.
in the chat. It's in the
Thank you,
chat.
Sherry.
It's clickable. So I
Appreciate it.
clicked it. I know that it will pop to that page. It will come right up. That's
Thanks so much for
incredible.
confirming it for me. I appreciate it. So yeah, if you missed how much this has done for our folks that have been enjoying Lightning Options Trader, you can see we're all about having you have a great experience both in learning and in opportunity to earn, with the $5,000 account growing to over 22,000 over the last 3.5 years. And you say, well, that's a lot of time. It's like, yeah, but it's also been a lot of whips and fake outs for a lot of people down and back
Yeah.
up. So you get all that goodies, all that stuff, mark it down by more than 80% to just 177 bucks. So definitely
And
don't
that's
miss
not
out on it.
including
Go to
the
that.
boot camp.
Yeah, exactly. And that's with the boot camp value added in there as well, that you won't have to pay. Don't click that boot camp extra cost. You get it all today if you act quickly and you're one of the first 14 buyers for just
Great.
177 bucks. And like I said, no auto bill. At the end of the 3 months, I'm anticipating you'll come back and say, I want more. How do I sign up for a year or two or more? So bottom line is that we are here to help you through the process, whether you've traded options before or not. We're going to guide you through and really help you be focused on the best ways to help grow your portfolio and manage your risk.
It's incredible.
Any
Oh,
questions,
so
Sherry?
Let's just double check. We got any questions up here? What was the link? Lewis, it's in the chat. It's HTTP. I put that in there so it's clickable in the chat.
Oh, thank you, Sherry. That's great.
And let's see. Oh, Randy said, hey, it's Randy from SoCal.
Yeah, exactly. Randy's one of our longtime Winter Circle students, so I do a Winter Circle session every once in a while that kind of guides people through
Awesome.
how to trade the markets in real time. So kind of a look over my
Awesome.
shoulder deal. So we've got a lot of a variety of services, folks, but this is a great way to get you a growth kicker and get really quick feedback on okay trades that can hit in a day or two. And so it's not day trading; it's quick swing trading basically, and we've seen it be incredibly popular with our BigTrends community. Thank you so much for having me, Sherry. I really appreciate it.
Thanks for being here again. And I hope you'll come back in the future. And I wish you the
Absolutely.
best with your 7-year-old.
Yes, exactly. Keeping me on my toes for sure.
All right. Well, you
You
have a
all take
wonderful
care.
day.
You
Bye
too.
now.
Bye.
All right. That was Price Headley of BigTrends. You really need to go and check that out. That is an incredible deal. And it's lifetime access to the boot camp.